Have you ever found yourself with a crisp $100 bill in your pocket, wondering how you could turn it into something much bigger? Perhaps you've dreamed of turning that $100 into $1,000 or even $10,000. It's an appealing thought, isn't it? The unfortunate reality is that financial literacy isn't something we're taught in school, leaving many of us feeling lost when it comes to investing. But here's the bright side. Investing doesn't have to be a steep climb. With a little strategy and some smart decisions, you can grow your wealth over time. So let's break it down and explore how you can start investing with just that $100. Watch to Get Rich is a place where you share investment strategies that have helped you build your wealth from humble beginnings. Now, I won't sugarcoat it. Getting rich isn't easy. It requires calculated risks and a willingness to learn. But I assure you, starting small can yield significant rewards. As we explore these options, we'll look at different levels of risk because, as the saying goes, higher risk can mean higher rewards. Let's first talk about the lowest risk option, a high-yield savings account. This is a safe and simple way to start your investing journey. While the returns can be modest, it's a great way to build an emergency fund, which is vital for those unexpected expenses that life throws at us. This is what happened to my friend Tom. I remember when Tom bought his first apartment, and within 2 months, the water heater decided to give up on Tom. Thanks to his small emergency fund, Tom avoided the payday loan trap and saved over $200 in fees. So look for accounts that offer competitive interest rates and give you immediate access to your money. Banks like Ally Bank or Marcus by Goldman Sachs often have solid options. Sure, the interest rate might be around 0.7%, which isn't great, but it's a start. Now let's switch gears and talk about gold, the timeless safe haven. Gold has been a reliable store of value for centuries, making it a great choice for protecting your money from inflation. Did you know that since 1913, the US dollar has lost a staggering 95% of its purchasing power? Meanwhile, gold has stood the test of time. If you invested $100 in gold in 2000, it would be worth about $580 today. You can invest in gold in two main ways: physical gold or through ETFs. Physical gold, like coins or bars, comes with its own storage and insurance costs, but ETFs like the GLD ETF make it easy to invest without the hassle. You can buy and sell at fair market value through platforms like Robinhood or Trading 212. Next, let's look at low-cost index funds, the powerhouse of compounding. Investing in low-cost index funds is one of the smartest ways to grow your money over time. Think of it this way. If you invested just $100 a month in an index fund that returns 7% annually, after 30 years, you'd have $123,000. Index funds track major market indexes like the S&P 500, allowing you to invest in leading companies like Apple, Microsoft, and Amazon without having to pick individual stocks. Warren Buffett once bet $1 million that an S&P 500 index fund would outperform hedge funds over a decade, and he won. Getting started is simple. Just open an account with a brokerage firm like Vanguard or Fidelity. And don't worry if you can't afford to buy a whole stock. Many platforms allow you to invest in fractions. Now let's talk about real estate investment trusts, or REITs. These funds allow you to invest in income-producing real estate without the headaches of being a landlord. Imagine owning a small portion of an office building or a shopping mall. By law, REITs must pay out 90% of their profits as dividends, which means you can enjoy steady returns. For example, Vanguard's VGSLX REIT fund has an average annual return of about 12%, which is impressive compared to traditional real estate investments. Plus, with global diversification, you can tap into emerging real estate markets around the world. If you want to get a little more hands-on, consider buying and selling items as an investment strategy. This approach requires some effort, but can yield significant returns. Focus on something you understand well. For example, Ben once bought a $100 model engine from Facebook Marketplace, refurbished it, and sold it for $200. Platforms like eBay or niche forums can help you reach the right buyers. This is a fun way to turn your knowledge into cash. Now let's talk about individual stocks. Investing in individual stocks can be fun, but it comes with a higher risk. During the dot-com boom, there were a lot of great investments, but there was also a lot of pain when some companies collapsed. The key here is research. Use tools like Yahoo Finance to learn about the fundamentals of the company. If you're just starting out, consider sticking with established names with a track record of success. Finally, we can't ignore the hype surrounding cryptocurrencies. They're one of the riskiest investments out there, but they also have the potential to be huge. If you invested $100 in Bitcoin in 2017, you'd be worth over $2,500 by 2025. Platforms like Coinbase, Binance make it easy to get into the market, allowing you to start with as little as $10. Just remember, only invest what you can afford to lose. So the takeaway? Investing doesn't have to be scary. Whether you choose a high-yield savings account, gold, index funds, REITs, or even experimenting with cryptocurrencies, the key is to start small and stay consistent. The journey to wealth is a marathon, not a sprint. Thanks for joining Watch to Get Rich today. If you found this information helpful, please give the channel a like, share with your friends, and subscribe for more wealth-building strategies. Together, let's turn that $100 into something extraordinary. See you next time.